Hi, I'm David Guarino with Green Street. I cover the data center and cell tower sector on our research side. Yeah, it seems like an odd question to talk about demand drivers in 2020 when the reality is most commercial property types actually saw demand weaken, but the global pandemic did generate demand for data center sector. And as most of the world was inside their homes, they still had to stay connected via the internet. And if you step back and think about why demand increased, it really makes sense. And I think we can kind of sum it up in three bullet points. First, people were working from home, and corporations across the globe had to quickly figure out how this remote work was going to happen. That meant scheduling virtual meetings, remote file sharing, utilizing different public clouds just to help operations run more efficiently. The second leg of it was children and those who are in higher levels of education were forced to learn from home. So just like corporations had to kind of scramble to adjust their services, educational institutions had to do the same. And then finally, our leisure time was obviously restricted. We weren't going out to restaurants or going to the movies. We were confined to the inside of our homes. So this meant a lot more Netflix and Prime movie streaming, a lot more time on social media, a lot more gaming. And basically all of this data being exchanged back and forth, over the past year has either touched or lived in a data center, which has created this massive wave of demand in 2020. To understand what impact those large cloud providers are having, I think we first have to take a step back and understand how the data center industry has evolved over the past decade. And really, it's changed as a result of these public cloud companies. So what a public cloud is it's basically, it's a shared computer server where data is stored. Now, because it's shared, the costs are lower. It allows for cheaper access to data, and that means more data can be created, stored, and analyzed. So that cost efficiency is a really big part of this, but also the operational ease of utilizing a public cloud provider. Think Amazon Web Services as an example. It really reduced the need for the traditional data center. And as a result, what we saw was data center tenants moved out of legacy data centers where they had to maintain their own computer equipment. And they said, wow, it makes a lot more sense if I can instead lease space on a shared computer where I don't have to maintain the hardware. Now, all that data still lives in a data center, but you're shifting from the computer you own to a computer you're leasing. So the growth in the public cloud, it's been so large that what it's done is it's actually put downward pressure on fundamentals for the data center sector. And here's the reason why. On one hand, you have these smaller tenants who are moving out of existing data centers. That creates vacancy. And although that vacancy is partially offset by these large cloud companies now coming in and leasing data center space, the challenge is pricing powers shifted into the hands of these large cloud companies. And it really comes down to what they determine they want to pay when it comes to setting the rental rates. So the sector is seeing rental rates continually trend lower as a result of these cloud providers really reshaping the industry. And overall, the disruption has been significant across the sector. Yeah, so the private sector is definitely going to have an impact and a role to play in 2021. And I think what it really comes down to is in 2020, we really saw the defensive nature of the data center sector. It held up a lot better than other real estate property types. And as a result of that, we've drawn numerous new investors who are just attracted to the secular demand story. And if you kind of think, we just talked about the challenged internal growth fundamentals in the sector, but what these private market investors are doing now is they're coming into the sector and focusing more on a development story. So they're adding new supply, and when you obviously have more supply, you do demand, you're setting up for an unfavorable environment when it comes to asking rents. So we're putting more pressure on already weak asking rents. The good thing is, throughout the past few years, demand in the sector has kind of remained in step with supply. So you haven't really seen a big change from that. But it will be interesting to see if this wave of interest in the sector has the potential to lead to overbuilding at some point. And it does pose a risk if we see, construction activity spike at the time when maybe new leasing activity slows from the pace we've seen over the last few years. So I would say all in all, the private sector is probably going to be more active on the development side in 2021. Really because the acquisition market is pretty thin. There's not as many opportunities to enter the space through buying a data center platform. Northern Virginia stands out as the most active market, not only in North America, but actually across the globe. For perspective, last year the market accounted for almost half of all new data center leasing in the US. And to understand why Northern Virginia, of all the places we could have a large data center market, I think it's helpful to understand the internet. So the internet functions by a series of connected fiber optic cables that run across the globe. And all these cables are owned by different parties. So if you have party A who has a cable and party B who has a cable, they have to agree to meet in one location so they can exchange internet traffic. And decades ago, that spot where they decided to meet was largely centered around Northern Virginia. This became a real hotspot for connectivity. And over time, it's just grown more and more important as the internet has grown as well. So connectivity is really what makes Northern Virginia such an active market. And it's not the only active market in the US. There's other markets that share similar characteristics. The next biggest ones would be in Silicon Valley, Dallas, and Chicago. And really their activity is due to the same thing. It's major connectivity centers, and data centers just kind of gravitate around these connection hubs in those markets. So M&A activity really has been concentrated in activity from the large public data center REITs, let's say for all the data center REITs for that matter. And what they've done is they all have traded pretty attractive cost of capital. So they're able to pay a higher price to acquire assets than some companies in the private market. And they've used that to their advantage. So most of the M&A activity has been concentrated in their portfolio. So you have a thin acquisition market. So you have a lot of private competitors that just don't have platforms to buy. And when data center platforms do come up for sale, the public companies tend to be the ones who end up buying those. So M&A is fairly limited in the sector. And I'd kind of go back to the earlier comment we made, which is I think most of the activity we're going to see is probably going to be around development projects rather than on the M&A front. For 2021, I think the most attractive characteristic of the sector is the secular demand story, just surrounding how important data usage has become for our lives. And this isn't a 2021 story. This has been a story for several years now. It'll be one in 2021, and it'll continue on into the future. So how do investors participate in this secular story? I think there's two ways they can do that. First is through private market investment, which clearly this is a highly specialized sector. Construction costs are very high. There's a high level of knowledge and expertise. So it's definitely a more cost and capital intensive and knowledge intensive business to get into. But for those who are willing to, that's definitely an avenue in the form of development. The other option is by buying public data center REITs, which essentially you're buying the same investment, you're buying it through a publicly traded vehicle. It provides a very liquid investment, but I think one of the pluses is it gives you access to some of the best operators in the space. The public data center REITs all have very high quality management teams. They have long track records of doing this, established relationships with customers. So I think for the majority of investors probably listening to this, buying the public data center REITs probably makes the most sense rather than a private market investment.